Good day. Another late tea with Travis. Today is August 11th, Tuesday, and a good day for mortgage bonds. Last week we saw 5 days of rates worsening every day. Market closes. First day we had 5 negative days in several months where we didn't see any improvement at all. But fortunately, yesterday and today we've seen improvement in mortgage bonds for a few reasons. One being yesterday, just simply the great gains the stock market has seen over the past several weeks and months. It's time for a sell-off as they've hit some ceilings of resistance in the stock market, and just the fact that there's so much profit taking right now with the gains they have seen, and so many people are excited to get some gains back and sell off all they can. I'm sure a little bit of fear and emotion involved in that decision. But also today, bonds have improved. There's 3 big Treasury auctions this week. The 3-year Treasury note auction today was $37 billion worth of notes, and I've mentioned in past updates. It's really significant to see how the interest is in these auctions, if it's domestic or international interest on a global economy. If there's a lack of interest, then it really causes the value of the bond or the Treasury note to plummet. So there was a really strong showing today on the 3-year Treasury note, which was great for bonds. Anytime there's interest like that, it causes most of the treasuries and long-range securities like a mortgage-backed security to perform well, or at least the value goes up. So that auction went well, causing more money to go into bonds, pulling money out of stocks, as well as the sell-off. So both the NASDAQ it closed under 2,000 today, and the S&P closed under 1,000. So those were some significant levels that they had surpassed last week and closed above several times. So with that being said, we did gain back some layer of support for mortgage-backed securities. They had plummeted through all layers of support on the moving averages with the 200-day, the 100-day, and so on. But they've gained back about the 50-day moving average today, and hopefully that'll create a big, strong level of support now to see us gain some of this ground back that we've lost through these mortgage-backed securities. And a part of it too is there's some different things going on in the economy with dynamics of unemployment rates and things. Last Friday was a big number and big report that only about 250,000 jobs were lost, 260,000 versus the 690 lost back in December. And so when you see those kind of numbers, and also looking at the unemployment rate actually took a step backwards by a tenth, went from 9.5 down to 9.4 on a national level, and they were expecting it to go up to 10. So if it's already regressing, that's great news for the economy, which again is bad for bonds though. So hopefully trend will continue simply for the economy being better, but it is bad for mortgage rates at times. There's kind of a thing called the underemployment rate, which it's not really captured because a lot of people went into private businesses of their own, operating a business out of your home, go to part-time status, or just simply retire or get out of the workforce because it's too hard to maintain. And with that, it's hard to capture those numbers, and those people have actually given up their full-time jobs. And so that's called the underemployment rate, and that's probably higher than the numbers are really capturing. So that's kind of a skewed way to look at it too. But the trending is that mortgage rates should continue to stay, even if not better. They did take some hits last week, but I think in the coming days we'll see some more improvement in mortgage rates, and look forward to that. So if you have any questions, please tune in to our webpage anytime at neliton.com, neliton.com. You can go there 24/7. We have daily updates on there as well, so you can tune in whenever it's convenient for you. But we look forward to serving you. Have a great day and be blessed.